Hello there, Maverick traders. This is Rob Reinhold with Maverick Trading, and it is March 2nd. Let's see what went on today. Today, we actually had a nice little bounce back in the markets. So overnight, we did get some positive numbers from Salesforce, which put at least the Dow Jones in a good mood at the first of the day. Look, we had some negativity overnight that actually brought this market down to where we actually opened the day on a downside gap. However, by the end of the day, we'd recovered all of that and closed positive. And this is in the face of two things that happened. Now look, this unit labor cost up 3.2%. This was the thing that really pushed the market down in the morning. And the 10-year bond is soared up above 4%. These are all things that should have knocked the market down, and yet the buyers came into this market. As you could see, it wasn't a super strong day. We only had about just over half of stocks going up. We have about half of stocks over the 50-day moving average. So it's really kind of a mixed bag. When we take a look at today, the Dow went up 1%, S&P up about 0.75%, NASDAQ the same, Russell underperformed. Look, this was a day where you can't ignore that we did have an up day. And if we take a look at the charts and we take a look specifically at today's candle, this is a bullish engulfing candle, a gap down to where we then close above the high of the previous day. Bullish engulfing candles are bullish candles. Now look, we don't have anything until we get tomorrow's candle. If we can get tomorrow's candle, a green candle, then I think we have to be open to the idea that we may actually have a bounce. And this bounce may even take us all the way up to maybe even the 40-60 area. That's very possible if we can put together another positive day tomorrow. If we fail tomorrow, which I'm going to give you my opinion, I think we do fail tomorrow. I think we get a red candle and it's back to, oh, we're just in this area here where we're just chopping around, where we should have bounced and we're not. Tells me the next move is likely to the downside. I think the reason we go to the downside is this chart right here. This is the 10-year U.S. government bond. And you can see we have now poked our head up above where we were at the end of the year. And back here, this is where the markets were on their lows, right around 425 on the markets. Since then, we've had big market rallies. Off of the lows of October, November, we're probably up 25%, 30%. If we get back up to this area, 425, which I think we likely do, I think the market's going to have a difficult time going higher. It doesn't mean the market's going to sell off and hit those October, November lows, but I think it's going to put a little bit of a cap on the enthusiasm of this market rally. So I think any rallies you see should be sold into until we can get a clear trend higher. If we take a look at the heat map, this was a pretty broad-based rally. Financials were the only sector today that were not positive. They went down about 0.5%. And you can see the banks. The banks really took it on the chin. We also see Tesla down 6%. Investors were less than pleased about Tesla's investor day yesterday, and they punished the stock. But outside of that, you can see a lot of green today, and remember, we opened mostly red, and we actually climbed back. So it's telling us there are buyers lurking out there somewhere. It is not a market rout. Even though we've been down for about 7 out of the last 8 days, it has not been a market rout whatsoever. So let's take a look at our scoring here. We have been at a -1 for our monthly outlook of the markets since about last week. Again, when we came down here and we went down below, we had to go to -1, and we said, look, we can't go any more bearish until we get a lot more of a breakdown. And that just isn't happening. So we are still going to be sitting at a -1, which means pretty much neutral with a small negative bias. We had a -1 on the week, and this week has turned out to be about a -1. We're about flat on the week, maybe up a tiny bit. If we have a little bit of a down move tomorrow, it will be a slight negative week. So there is the market outlook. Again, we think this market could have a bounce here. It could. But we think the bounce is likely to be sold off. We might even run up to the 40-80 on the S&P. But we think this is still a market you want to be neutral overall, but more short than long. Let's take a look at a couple trade setups. Now, I took these trade setups directly out of our Wednesday session. This is where our traders all share trades with the rest of the group. And I love this one. This is JBL. This is a semiconductor stock. And you can see this really, really nice high base forming. just waiting for a breakout. Now remember, this stock has been going sideways to higher this entire time the market has been going lower. This is showing relative strength. If the market can put together a decent couple days of a bounce, these are the stocks that do the best, the ones that held up. The ones that held up in spite of a bad tape. So JBL, now look, this thing, okay, this is a 5-point move. I would not say that this is likely to run up to 90. I would be more comfortable with the target of like an 87. So I think you can play spreads between 84 to 87, maybe even 84, 86. That would be perfectly fine. This isn't the market where we think these things are going to break out and run 10, 20%. This is the kind of market where we think if it does break out, it's got a couple percent in it, and that is probably about it. So again, understand where we are in the market cycle. Don't ask your trades to do too much. This here was another trade from our traders, O'Reilly. This was given yesterday. Basically said, hey, nice reversal candle on the support line, and you can see monster day today. Same thing here. I'm going to say, look, you can't get wildly optimistic in this market. It is a -1 market. Things don't run unless it's like a +2 or +3 market. So you have to be very conservative. So 865 here, I'm going to even chop that down to like 860. Could be about the most you could be bullish on this. And if someone said, Rob, I only want to go to 850, I think that is even smarter. So as you can see here, 840 to 850, easy for a bull call spread, 840, 850. You could be in a diagonal spread as well. Those diagonal spreads do get a little bit more pricey when you get higher price stocks, so the vertical spread may be the one to go with. On the neutral side, one of our traders gave Apple, said, hey, look, this thing looks like it's just pinned between moving average. And I like this trade quite a bit. So the trade would basically be at 140, 145 right at the money, and 150 butterfly. So basically saying, I don't think it's going to move much past 150 and much below 140. I'm going to sell some theta and bring that in. But of course, protect myself so I won't be naked on options. So the 140, 145, 150 for next week, I think that is a solid trade because this market doesn't look like it's going anywhere fast. It looks like a lot of chop, a lot of one day up, one day down, but ultimately not really going anywhere. Being positive theta in sideways trades is a good place to be in these kind of markets. And on the short side, one of our traders gave ADM, Archer's Daniel Midland. And you can see we had a nice breakdown on Tuesday. And look, we found a little bottom here. Today was an up day, but look, the volume was not all that great. We had an up day. These are the days you want to sell. Again, whenever you get these up moves in these downtrending stocks, it's just a signal for you to sell. Yes, at some point this will change trend and this will become an uptrend again. But as far as right now, you want to sell rallies and sell bases. So I really like this trade. It's giving you even better entry point here. But again, we're not in this market that's going to go crazy. I think 79 is the best target you can hope for. So I'm looking at like a 79-81 bear call spread. Very wimpy trade here on this one, not asking it to do too much at all. So let's take a look at tomorrow. We need a bullish candle to consider this a bullish engulfing candle. It is a bullish engulfing candle now, but remember, we always need that one more day of confirmation because, look, this could just be a little short one-day rally and it fizzles by tomorrow. And frankly, I'm going to give you my opinion. I put down likely to fail. I think this market is more short than long. It is more heavy, which tells me I want to be sellers on up days because they tend to fizzle out. If we do get a green candle tomorrow, you know what? I think we may have another day or two left in this rally. We could go all the way up to 40.80. This is where we position size things for max loss, and we give ourselves enough time for things to work out. Tomorrow, we do get the ISM services. This report comes out better than expected. Expect it to put a little downward pressure on the market because it means the Fed is going to see that and say, we have to do more to slow this economy down. Other than that, there's really nothing left on the schedule, so let's close out this week, and we will look towards next week. Thanks for joining me. That is the market recap.